your usual tax reporter who comes on at 10 a.m. on the West Coast and 1 p.m. on the East Coast, hoping that coming from all these miles distance, hoping that our reception is clear. This is Everett James, your trusty tax reporter. We usually, as I mentioned, come on every week to keep you up to date, particularly during this time of tax filing season for 2025. We invite your participation, and that means calling in your questions and your comments. Please direct them to this reporter, whose phone number is 951-522-9877. Again, 951-522-9877. The email is evjtax1@gmail.com. That's evjtax1@gmail.com. Okay, here we are in the middle of the 2025 tax filing season. And I can assure you that the lines are hot. The IRS began taking returns really for 2025 back on January 26th. So we're right in the middle of the 2025 reporting season. Some tax professionals had predicted that the filing season would be delayed because of all the work the IRS had to do just to implement that one big, beautiful bill that got passed last July 4th, 2025. They had really had expected a major delay just in the filing season, not to mention interruption of taxpayers' service. So however, the agency, has succeeded in making the necessary changes. They do have a few rough patches. However, they're doing fairly well considering their diminished workforce. They lost 25% of their workers over the last 12 months. And the departures represent all experience levels and functions within IRS, including taxpayer service, and included collection, IT support and enforcement. The taxpayers and you folks out there will still have a lot of questions on how much assistance a lot of questions on just the details of filing. So there will be people, I can assure you, answering the phones, but please expect to have a considerably long wait. And then give them a lot of room and a lot of support because they're going to take longer than normal just to respond in the way that you expect with specific information, specific guidance. They keep in mind that these workers had to be the ones who got added to just the telephone response program. They have other duties, and of course, the other duties had to be put on hold. So some experts are saying that this year's tax refunds will be bigger than in years past. That's thanks in part to several new tax breaks for individuals, under the OBBB, the one big beautiful tax bill. Among them, the higher standard deductions, the $6,000 write-off for folks who are age 65 or older, or $12,000 on a joint return if both spouses are 65 or older. Deductions for up to our deductions can be taken, as you recall, for up to $25,000 of qualified tips, up to $25,000 on overtime. Yes, qualified overtime compensation. And then, of course, the new returning deduction for folks who are paying for a car loans. But keep in mind, this is not for cars on lease. It's not for lease vehicles. It's for cars that you're actually buying. So keep those in mind. Take note of the change in the IRS's processing of tax refunds. You know, paper refunds have gone the way they're supposedly beginning this year. The IRS is generally paying tax refunds only to individuals by direct deposit or some other form of electronic methodology. If you don't provide your bank information, bank direct deposit information, the routing number and the account number, wow, you know, you're going to face a delay in your refund. So IRS is urging people without bank accounts to hurry up and open up a bank account. The Social Security Administration is offering the option of prepaid debit cards to beneficiaries, but and that's just to beneficiaries of Social Security. But the IRS hasn't started doing that for refunds. So you know, it appears that you can continue to pay your taxes with a paper check. So they'll still take that money if, in the form of a paper check. They haven't as yet cut out that method or disapproved of that method. So we want to make sure that you do pretty much everything. Do everything via the electronic mechanism. Okay, the first, before we get too far into this, I want to offer this incentive for our listeners who call in their questions or call in their comments. And as I mentioned earlier, we are supporting the efforts of a local baseball team here in Southern California. It's a travel team sponsored by Mr. and Mrs. Jason Wooten, Wooten. Please consider helping them. Their phone number is 951-534-3838. Easy phone number, 951-534-3838. Okay, this is for a traveling baseball team, 9 and 10-year-olds. It's been in existence since 2023. It goes by the name of Riverside United Baseball Club. And they are doing so well, basically. The only difficulty, of course, is the funding. Normally, a lot of these traveling baseball teams, the parents wind up, footing the bill. Usually running between $150, $400, and $400 a month. But we have a group of very extremely talented young men. They all generally come from low income families, but their skills really do surpass just recreational baseball, and they keep winning games. And so, as a result of their success, they have been invited to various tournaments out of state. Right now, they've been taking advantage of offers from Arizona and next door neighbors to California, and we're asking for your help, in either in the form of cash, for help with the baseball, for weekend stays at motels, or possibly something to help with getting help them buying, team cleats, helmets, team jerseys, batting gloves, team equipment bags. Please consider making a contribution, no matter how small, and call them again. Um, Cicely Wooten, Wooten, at 951-534-3838. Okay, so folks, we have, as I mentioned, right in the middle of the tax season, and what we will need to, what we will be focused on is some of the changes that you should be aware of. For example, if you are in the category of having a private business, keep in mind that IRS is expecting you to report your 1099 earnings, and generally that standard has been bounced around more times than you could imagine. But 1099s are going out for any earnings in excess of $600 right now, $600. The but Keep in mind that the earnings that you report on the 1099s. Let's hope that that's not the only bookkeeping you have, because you really can reduce the impact of those earnings by simply reporting your expenses. Generally, the expenses can be taken credit for on the Schedule C for small businesses, and we'll be grabbing a look at some of the specific changes during this hour. The At this point, I'd like to share with you, before we get into some of those specific changes, a couple of articles which really give you an idea of what some of the stories are on the local California front, and see if some of these stories are close to what you're experiencing in all of your other states outside of California. Well, one article that was published by the San Bernardino Sun back on December 1st of 2024, by John Kupal, who was a columnist. And it's entitled, "Thankful for Prop 13 Protection." Are we indeed, California, thankful for the protection of Proposition 13? Um, and we're thankful for the fact that a Proposition 5 came up on the ballot out here in California. It's probably similar to some other things taking place in your other states, but it would have made that Proposition 5 would have made it easier to raise property taxes. Wow, affecting homes, apartment buildings, commercial real estate. Prop 5 out in California, it would have burdened Californians with a higher cost of housing and higher cost of living. It's just a good reminder, at least out in California, but we should be thankful of the passage back in 1978 Proposition 13, 13. And that took place exactly about 10 years before this provider of information, this broadcaster, purchased his house, which was back in 1987. But I was very, very thankful for that 1978 initiative, put sensible limits on increases in property taxes, and also made sure that those limits were put into the state constitution. How many other states have had a similar experience or are considering attempting to get that put on your own individualized state election schedule, which is well worth the efforts. The Back before Proposition 13 passed in California, some properties were reassessed every year. Some, they got reassessed 50% to 100% higher in just 1 year. So the owner's tax bills skyrocketed. And usually they jumped up to levels way beyond the homeowner's ability to pay. And for example, in 1 year in Los Angeles County alone, 400,000 people had not paid their property taxes simply because they didn't have the money. And of course, that ran the risk of them being forced out of their homes. So, retired people on fixed incomes, they were among the hardest hit. Many many of them had already paid off their their mortgages. Yet, even having paid it off, they ran the risk of losing their homes because they couldn't afford that ongoing property tax. So back then, in the mid 1970s, Howard Jarvis and the Howard Jarvis Taxpayers Association, they gathered more than 1.5 million signatures to qualify for a statewide initiative. Has that happened in your state, folks, or should it happen? But anyway, that statewide initiative was called Proposition 13. And of course, an overwhelming majority of California voters voted for the Proposition 13, despite a campaign of scare tactics. It cut the Prop 13 cut that property tax rate out in California from a statewide average of 2.67% down to 1%. To this date, even new homeowners are saving money compared to what they would have been paying. And for folks in California, check out the Howard Jarvis Taxpayers Association calculator. You can go online. It was at guessinggame.org for a new look at how much you'd be paying in additional property taxes if Prop 13 had never passed. And that's at the is at the Howard Jarvis Taxpayers Association. Look it up and see how much additional tax you would have had to pay. Prop 13 limits the annual increase in assessed value to the rate of inflation, which is limited to 2%. Under Proposition 13 out here in California, even if a property doubles its market value in a single year, its taxable value, that's the figure against which the assessor applies the 1% tax rate, it can only be increased to a maximum of 2% per year. The next thing is Prop 13 requires reassessment of property when it changes hands. Well, this provides for local governments with a stable and predictable source of tax revenue, of course, which has grown in virtually every year since 1978. The Prop 13 also protected taxpayers by requiring the 2/3 votes of the state legislature to raise taxes, and also by giving Californians the right to vote on local tax increases. But the important thing is that it requires a two-thirds vote. The two-thirds vote is particularly critical when it comes to property taxes. Folks, can lose their homes if they can't pay that property tax bill. So the vote threshold must be higher than a simple majority of voters. Many of them who are just voting on a tax they personally that they personally would not have to pay, at least not directly. It's this two-thirds protection that Proposition 5 attempted to destroy. So so that's an important thing for you to be aware of. Hello. Hello. Yes. Okay. So. Okay, folks. So sorry for the little interruption there. So we want to. If a proposition lookalike does not show up on your individual tax schedule in your state, please feel free to contact this programmer, Ev James, at 951-522-9877. Or through the email at evjtax1@gmail.com. Okay, a couple of articles to share with you. In Riverside, California, and it'd be interesting to see in your telephone or email comments if any of these situations are duplicated in your own individual states. This is an article from the San Bernardino Sun again, entitled "The Council Isn't Likely to Redo Its Homeless Housing Vote." That's a homeless housing proposal that has been considered in Riverside, California. Advocates of this housing vote is to set up a homeless housing establishment in Riverside. They do face an uphill battle in their efforts to get the Riverside City Council in California to reconsider its rejection of a $20.1 million bill to convert a motel into homeless housing. Well, they've got to get one of four council members who voted against the project to change their mind and ask for a second vote. So just to give you some of the skeletal aspects, of the the bill that is pending before the city council. In mayor, the mayor in May rather, the Mayor Patricia Locke Dawson cast the tie-breaking vote to the city's application to the state to request the funds. And in last November, the city learned it had won the grant. However, when they took the vote at the city level, it was rejected. And one of those city council persons, his name was yes, it was Mill, a gentleman by Sean Mill, explained that his opposition to the project comes from his belief that the housing first model, and that's the model that many of the homeless encampments use to substantiate their argument for a homeless establishment. Um, Many of those housing first mottos, as they call them, they're really an approach that's aimed at reducing homelessness by focusing on just providing permanent housing without any prerequisites. And it's just providing a place to live without any of the other prerequisites. The funding, however, can be used to provide dignified housing solutions for people who need it. However, one of the main objectors to it on the city council reported that this is, is based on the model and the rationale that is considered in the so-called Housing First Amendment. The gentleman who I mentioned earlier, Mr. Mill, added that this was additional money that the city would not have to have spent if they, come up with, if they approve establishment of this supportive housing project. However, his concern lies with the need to get mental health and substance abuse for homeless people before just simply giving them housing. He states that we need to go forward with what's working, but we also need to stop doing what's not working and put together a hybrid approach. So he's pushing, okay, bring in the housing first, but bring in along with it treatment along with the transitional housing. And he also says that the housing should have prerequisites for these residents, such as sobriety, participation in treatment, or compliance in mental health programs, especially for those who have documented mental health and substance abuse disorders. He added that he's advocating using other states' rules. His goal is recovery, accountability, and safer neighborhoods. So they did have until the end of February, which has already passed, and I will report to you next week on what the current status of this project is in Riverside. Since we are in the really in the middle of the tax season, I would like to just update you, of course, on what some of the additional deductions are. Keep in mind that for folks who are in small business and who are you might say folks who are running businesses out of their own homes and considered to be self-employed. For those folks, keep in mind that the deductions for business expenses that has been increased to 70 cents per mile. For medical deductions and moving expenses, it's been increased to 21 cents per mile. And if you have an office in your home and you're deducting or using a deduction for the space in your home, you can use the simplified method, and that allows you to deduct up to $5 per square foot, up to 300 square foot. Um, and in addition to all of your actual expenses, the I would strongly recommend that you stay very, very close to your tax professional in uh, in claiming those deductions, because there's so many complicating factors, particularly those outlined and specifically detailed in the 2025 One Big Beautiful Bill that got passed last July 4th of 2025. So those most employees who had been in the habit of using the Schedule A in their filing tax return learned that they could get a lot more of a deduction just by taking the increased standard deduction, which was legislated back in July of last year. And so they've just dispensed with the idea of going through all of the hassle of computing what can be deducted on the Schedule A and just taking the standard deduction. The so the keep in mind that teachers can per the One Big Beautiful Bill that got passed last July 4th, they can write off unreimbursed expenses somewhere else on the return other than the Schedule A. They can actually go to Schedule 1, line 11 of the 1040, and they can write off up to $300 each on the Schedule 1. If you're a statutory employee, what is a statutory employee? That's generally an agent or commission delivery drivers, home workers, folks who sell life insurance, and some traveling salespeople who use Schedule C, performing artists with at least 2 employers who earn $200 plus in wages, incur costs over 10% of their income, and have AGIs of $16,000 or less. You can use Form 2106 and Schedule 1, line 12 of the 1040. So if you are teachers or salespeople, you do have these additional options to write off your business-related expenses without having to deal with all of the restrictions of the Schedule A. If you're a reservist or a National Guard member who has had to go on overnight trips of over 100 miles, there's opportunity, in the One Big Beautiful Bill for you to deduct those expenses. If you're just employed by the state or county or city and you're paid on a fee basis, there's also a coverage, for yourself. If you're employed by the state, county, or city who's paid on a fee basis from the public instead of receiving a salary or wages, that allows you to deduct or you have to use the 1099 from your employee agency instead. So there's a call for was a technical assistance from your CPA or tax preparer before attempting to deduct some of those expenses. Okay, you've probably heard about the tax advantage child savings account. Wow, that will assist those who already use the tax advantage state 529 plan. But that is going to be a great boost for folks who have children, because beginning in the middle of this year, their IRS is providing a what they call a tax advantage child savings account that is that's going to be a great boon, and we'll cover that shortly in depth. For folks who send their kids to day camp, keep in mind some of those costs you can write off. And these include camps for sports, for math, theater, robotics, or just general fun. That can be written off. However, the costs of just straight summer school, or just tutoring programs, or just overnight camps, those are not eligible for the deduction. So just remember the rules for taking the credit, and that's for the what they call the dependent care credit, which is written off on Form 2441. That's not the child tax credit, but it's called the dependent care credit. There's two different things. And the dependent care credit is requested and documented on Form 2441. Keep in mind that those credits on the 2441 are called the dependent care credit. The child that you're getting taking the credit for have to be under the age of 13. Expenses must be incurred that enable the parents to have a job, or enable the parents to look for work. So there's all kinds of additional deductions, many of them substantiated and increased under the one big beautiful tax bill that was passed last July 4th. So going on, you can escape federal income tax withholding from your paychecks if you owed no money for the previous year and don't expect to owe any for the current year. You have to go to your W-4 and get on the W-4, fill out steps 1A, 1B, and 5. Their IRS does have a free file program. It'll continue through at least 2029. That program lets lower and middle income taxpayers use free commercial tax softwares to prepare an e-file. But that's that option may be phased out in the future, because IRS has reported very, very low usage of that particular option, and so that may not stick around. Although they keep saying that they have hopes of making that direct file option permanent, but that could be removed if the use of it by taxpayers is not increasing. They this past the filing season, IRS did initiate a pilot program for that free filing. They call it free filing direct file option. They're looking at how those pilots are going, how it feel. So the keep those in mind. So now, what we need to do, folks, is for you who are filing the Schedule C, and that's based on your 1099 reports. First off, and the higher income self-employed folks who get the 1099K forms, the threshold for those forms has been dropped. It used to be $20,000 of reportable payments and 200 transactions. That was in use for years, but they dropped that threshold from $20,000 and 200 transactions down to just $600, and that winds up being the same threshold that's applicable to all the other self-employed form 1099 forms. So just be sure that if you get a 1099 form that will cover or report your self-employment earnings of $600 or more, that should not be ignored, and you will definitely get a notice from IRS if you do not report those earnings on your Schedule C, or report those earnings in some other way. Separating, which the first thing you need to do is you need to separate out your money that you received from in one category you have personal loans or just money that's received as a gift. Okay, if you can get it categorized as a gift, then that falls in a different category than earnings that have to be reported. And so you need to report the income that you received and get your tax preparer to help you establish the category falls in either a gift or a reportable income, taxable income. A lot of gig workers, as they call them, haven't been reporting income from those side gigs. And of course, with not reporting that income, they also haven't been taking advantage of allowable deductions. Keep in mind that 1099Ks and other 1099s, they're only reporting your gross income from the jobs. It doesn't show you your ordinary and necessary business expenses that are deductible by all self-employed workers for performance services. Certain expenses are fully or partially deductible, and anybody who fits into this gig category should track these expenses to reduce their taxable income and minimize their tax liability. IRS may take the position that all of your gross receipts reported on the 1099 forms are income, and they will disallow deductions unless the taxpayers can substantiate them. Ideally, all taxpayers should keep receipts as evidence supporting their deductions. However, advising clients to keep a separate bank account and run all business expenses through that separate bank account. That, at least minimally, will provide bank statements and canceled checks as substantiation for deductions. That's better than nothing, rather than just a list that you keep in pencil format, on unofficial notepads. Keep track of those expenses, on a form that you could present to IRS as substantiation. Um, Now, if the main expenses for some of the main expenses for folks who drive and deliver things, uh, taxpayers can deduct either the actual cost of using the vehicle in a trade or business or claim a per mile deduction. And as I say, the per mile deduction for this current year yeah, is 70 cents, per mile. So when you are driving your own car for your side business, so for example, just delivering people, um, uh, you know, and it's important to distinguish between business and business miles or personal auto expenses. Remember that driving to pick up fares gives rise to deductible expenses, even if the driver does not have a passenger in the car. But however, IRS may disallow a certain part of the expenses if the taxpayer is actually running just personal errands between passengers. Some side gigs require taxpayers to use their cell phones or the internet. The first step to substantiating these expenses is keeping cell phone records. Next, cell phone usage needs to be apportioned or allocated between personal and business expenses. Courts have allowed deductions based on testimony, but it's always better to have a documented business use on paper. And that's contemporarily, do it on a contemporary business, and do it as it occurs, not after the fact of an audit. Courts do need a reasonable basis to estimate business versus personal use. And you should be able to buy and use a call log that can help to substantiate the business use. Other expenses that you should be aware of and that you should be documented if you're a gig worker. Substantiate clothing that is required or essential for the employment. The clothing must not be adaptable to just general usage, such as ordinary jeans. It has to be something special in the jeans, or upper body clothing, perhaps with the logo or a company name that's embedded into the clothing. So the idea is that it must not be actually worn as just ordinary clothing. So ask if your client is required to purchase tools or supplies or special equipment. A deduction is generally allowed for these things if they're ordinary and necessary in the taxpayer's trade or business. Tools and equipment used for production of goods have reached a safe harbor that allows for immediate expensing of items or invoices of $2,500 or less. Otherwise, you may need to depreciate these for tax purposes. So, as I say, you can, if they cost under $2,500 each, and you can just deduct that amount on a yearly basis. However, if it's over $2,500, it still does need to be depreciated. Keep in mind that expenses for meals, when you are if you do have expenses for meals and you're not away from home, generally they're only deductible if eaten during a business meeting where the presence of the customer is there with you eating the meal. or if it's for a business purpose. Also, don't forget hobby loss rules and the requirement to show a business profit for a certain amount of years or otherwise limit deductions for activities not engaged in for profit. And usually that percentage is 3 or 5 years. IRS will come in and check your Schedule C forms and require that you have at least a profit in 3 of the past 5 years. If you don't have a profit in 3 of the past 5 years, they're not going to consider that a activity that you're involved in with the intent and motive of making a profit. So be sure that your payments are being recorded accurately, right? Payments received in the trade or business should be separated from personal things such as check splitting or restaurants or gifts. If the payments, after said and done, if they've been reported incorrectly, try to get a corrected 1099 form, from the business that you worked for, and that includes 1099-Ks. Practitioners should explain the requirement for substantiating their business expenses, and they better be required also to answer questions about that. Preparers simply cannot omit taxable side gigs from a gig worker's Form 1040 tax return. You need to discuss taxpayer penalties for failing to report income. And just remember that even for tax preparers, there are tax preparer penalties for failing to report income, correctly. There is a detailed guidance on Form 1099-K, and it covers requirement to file a 1099-K with IRS. There's another form that covers hobby loss rules and activities not engaged in for profit, such as hobbies. There's a form that covers substantiating trade or business expenses. Another form substantiating automobile expenses. One that covers de minimis safe harbor elections amounts paid just to acquire or produce properties. And then there's guidance on civil penalties imposed against tax return preparers. So it's covered, by IRS publications. Take heed and to provide additional information that I just went over for folks who are self-employed and who need this guidance. Please feel free to call my number at 951-522-9877 or send us an email providing your reaction to this weekly program and questions at evjtax1@gmail.com. That's evjtax1@gmail.com. And do not forget to support our local baseball team by contacting the sponsors. They're currently in the process of filing for a 501(c) status. But it's Cicely and Jason Wooten. Cicely and Jason Wooten, Wooten, at the phone number 951-534-3838. That's 951-534-3838. Please give them a helping hand. before we end our program, keep in mind that many seniors out there receive monthly Social Security, including this presenter. The federal taxation and benefits hasn't changed under the last year's July 1 Big Beautiful Bill legislation. President Trump had promised to make the benefits fully tax free, but that is this is not fully tax free. Part of it is still taxable. The complex process, and it was complex, that Republicans used to pass that one big beautiful bill. It just did not allow for this change in the taxation of Social Security. Some folks, keep in mind, are not taxed on their benefits. Who are they? Well, they're individuals for whom Social Security is the sole or the primary source of the gross income. So if you're only getting Social Security, you're not going to get taxed on it. It's just when you get it additional money in addition to your Social Security. Others could owe tax on their benefits, depending on the amount of what they call the provisional income. The provisional income can be fairly complex, but just keep in mind that it equals a total of about 2 or 3 areas. You have to take your tax exempt interest, number one, then add that to 50% of your Social Security benefits, number two, and then number three, other Social Security income items that make up your adjusted gross income, and then also minus certain deductions and exclusions. So keep in mind that in general, if you're single and that provisional income is less than 25 grand in addition to your Social Security, then the benefits are fully tax-free. If that provisional income, you have to take your Social Security and a provisional income as the amount. But if the provisional income is between $25,000 and $34,000, then up to 30% of the Social Security benefits are taxable. And then if the provisional income is over $34,000, up to 85% is taxable. So, folks, that can get pretty much in the weeds. And for more information about figuring out whether your Social Security is taxable, I'll be glad to provide a special section in our weekly program to cover that area. So it appears as though our time is up for this week. Enjoy sharing with you, and please take part in this program, and we'll look forward to seeing you next week.
All right, yeah. Hey, great information there. And guys, like I said, if you take, if this program, if you got something out of this, hey, please share it with a friend. You can download that app. Go to your Apple App Store if you have an Apple device, and download Studio W. Android, Google, just go to your Play Store and download Studio W. You can also hear it via the website. That is www.studiow.buzz, as well as LinkedIn, YouTube, and Facebook. You can check them out each and every week, 10 a.m. on the West Coast, 1 p.m. on the East. And as always, make sure you come back tonight for Cultural Excellence. We're going to play a lot of good music, smooth jazz, R&B, and Southern Soul. The program starts at 5:15 p.m. on the West, 8:15 on the East. Enjoy your Wednesday.